Welcome back to Smart Stock Sam, where we cut through the noise and follow the money. Here's a question you need to sit with for a second. What if the biggest asset managers on the planet, State Street, Morgan Stanley, Bank of America, were quietly loading up on a small-cap AI stock weeks before the rest of the world even noticed it existed? What if that same company was staring down a 1,300% revenue surge and had already locked in a quarter of its 226 targets before the year even started? And what if, just what if, you were watching this right now before the crowd piles in? That company is DataVault AI. And today on Smart Stock Sam, we're going to break down why this could be one of the most compelling AI accumulation stories unfolding right now. Institutional conviction, a toll booth revenue model, a 100-city expansion plan, and a roadmap stretching toward $2 billion. We're going to go through every layer, visual by visual, so by the end of this video, you'll understand exactly what the smart money saw and what the retail crowd hasn't caught up to yet. Let's get into it. Right. So first, the financial picture. DVLT is projecting 45% year-over-year revenue growth with a 60% jump in EBITDA by 2025. Earnings per share growth is expected at 50%. And here's the kicker. All of that comes with a beta of just 0.75 against the S&P 500. What does that mean for you? It means this is a high-growth AI play that isn't swinging wildly every time the market sneezes. That is rare. Most companies growing this fast are roller coasters. DVLT is building a case for being something different, a dominant player in AI-powered financial infrastructure with serious institutional credibility behind it. Their stated goal? Growing market share from 2% all the way to 15% in 3 years. Bold? Absolutely, but wait until you hear who's already betting they'll get there. Because this isn't retail hype, this is institutional conviction at a scale that's almost hard to believe. We're talking a 365.29% surge in institutional long positions in a single quarter. 28.56 million net shares added. The total institutional long position now sits at over 36 million shares. And here's what really stands out. The number of institutional owners jumped by over 51%, and right now, there is a complete absence of institutional short positions. Nobody in the institutional world is betting against this stock. When the biggest players in global finance are only buying and refusing to sell short, that is not noise. That is a statement. Now, here's where it gets really interesting, because timing is everything in the market. Did these institutions just stumble into DVLT randomly? Not a chance. Look at the calendar. On February 13th, State Street Corporation moved in with a massive 10 million share position, followed closely by Morgan Stanley. Then, just 4 days later, once the company officially lifted its forward guidance, Cube Research and Bank of America followed suit. Think about what that sequence tells you. The world's largest asset managers did their deep dive due diligence and positioned themselves before the guidance revision even became public knowledge, before the news cycle, before the retail crowd even opened their trading apps. That's not luck, that's conviction backed by research. So what did they see? Part of it is this: the revenue inflection point. DVLT is moving from actual fiscal year 2024 revenue of $2.7 million to a midpoint guidance of $39 million for 2025. That is the 1,300% acceleration we mentioned at the top, and it's not a projection pulled from thin air. This is the company transitioning from concept phase to execution phase, turning signed contracts into real GAAP revenue. The business model underneath it all is what they call the toll booth model. And here's the simplest way to think about it. DVLT doesn't create the content. They own the rails the content rides on. Recurring transaction fees on the infrastructure of data itself. That means higher margins and far less exposure to the risks that kill most tech companies. Let's look at the numbers. The company has set a $200 million revenue target for 2026, and they've already signed $49 million in tokenization and technology licensing agreements just in the fourth quarter of 2025. That means 25% of their full year 2026 goal is already locked in and de-risked, done, secured. For a small to mid-cap AI company, that level of revenue visibility is genuinely rare, and 2026 is just a waypoint. The long-term roadmap stretches toward $2 billion to $3 billion by 2027. The vehicle getting them there is what management calls full node deployment. Think of it as a 100-city build-out, where each city represents a $1 billion annual opportunity in high-margin data monetization. They're moving from data science momentum in 2025 to a full-scale global infrastructure play within 2 years. Now, can they actually execute on that? Here's your answer. The CEO has been on a 42-day global tour, closing deals across Europe and Asia. During Super Bowl 60, DVLT deployed its ADIO and DV Holo technology on one of the highest-stakes stages in the world, proving the platform can handle the pressure. They've locked in strategic partnerships with NFL Alumni Health and made acquisitions like API Media Innovation. This isn't a company sitting in a boardroom drawing up slides. They are out there closing. The physical backbone behind all of this is a rollout of 100 GPU-powered edge nodes across 33 cities. Starting in high-margin sectors like finance and healthcare in New York and Philadelphia, management estimates a $1 billion annual opportunity per city. Near term, they're targeting a $400 million to $500 million revenue buildup from this infrastructure alone. This is not cloud storage. This is localized, high-speed processing power, and it's going to be everywhere. Protecting all of that is an IP portfolio that most companies would envy. DVLT secured 9 U.S. patent allowances in just 10 months during 2025, covering audio synchronization, carbon credit tokenization frameworks, and integrations with major platforms like NASDAQ via NYIAX. These are the legal walls that protect the territory as the data monetization market grows. And what keeps enterprise and biotech clients sleeping at night? Security. DVLT answers that with Sanctum AI, a quantum-resistant infrastructure built on a zero-trust model with tokenization at birth. No public cloud latency risks, no exposure to traditional breach vectors. For high-value clients, this isn't just a nice feature, it's a requirement. And once a client is inside this ecosystem, switching out is not simple. That's what makes this platform sticky by design. The market is starting to wake up. StockTwit's sentiment flipped from neutral to bullish in under 24 hours. The company has also structured a warrant dividend, one warrant for every 60 shares held, with a strike price of $5, creating a powerful incentive for long-term holding and aligning shareholder interests directly with the company's aggressive growth targets. This is management putting skin in the game alongside investors. On valuation, traditional trailing PE ratios are a lagging indicator that completely miss what's happening inside a company growing at this velocity. When you model forward price to sales against the 2026 $200 million target and the 100-city expansion, the current valuation makes a lot more sense. The market already started pricing this in. Shares jumped 11% to 79 cents following the February 17th announcement. That move, it might be the opening act. Before we wrap up, please understand that nothing in this video is financial advice. Smart stock. SAM is for educational and entertainment purposes only. Always do your own research, consult with a licensed financial advisor before making any investment decisions, and understand that all investing involves risk, including the potential loss of principal. Past performance and forward projections are never guarantees of future results. Small cap and micro cap stocks carry additional risks, including volatility and liquidity concerns. So, here's the bottom line. DVLT sits at the crossroads of artificial intelligence, financial infrastructure, and institutional-grade capital deployment. A 51% increase in institutional owner breadth, a 1,300% revenue acceleration, 25% of 2026 goals already locked in, a toll booth business model that owns the rails, 100 GPU-powered edge nodes rolling out across 33 cities, 9 patents secured, quantum-resistant security, and the world's largest asset managers already positioned before the rest of us noticed. The smart money followed the data. Now you've seen the data too. If you found this breakdown valuable, smash that like button, subscribe to Smart Stock Sam, and drop your thoughts on DVLT in the comments below. I want to know where you think this goes from here. Stay sharp, stay ahead, and I'll see you in the next one.